Good day, everybody. This is Mike Zuzolo of Global Commodities with your Monday, July 22nd grain market update. Funds and speculators had the renewed interest in buying the soybeans and selling the feed grains to start the week on Monday. We can see the divergence in the trader sentiment with the new contract highs and limit up move in August soybean meal versus new 3-week lows in September wheat early in Monday's session. The tight supplies of cash soybean meal and as August futures, like I said, went into delivery or are going to be going into delivery in the next week or two, kept the soybeans up over 2%, even though soybean basis in some locations has weakened. I think we've hit a point now where availability of cash meal is getting tighter and tighter and tighter, and that helps explain why we saw the limit up move. We may be heading towards a price level that's going to have to encourage imports of meal, and that may be something that we'll have to be watching to see if August meal doesn't keep on going higher this week. Adding some support to the soy psychology, which I think was big support, was the ability of the gold, silver, and copper all to move up on Monday, anywhere from 1 to 5%. Bullish traders returning to the metals. On the news over the weekend that China was liberalizing their interest rate policy. That shift in their tight controls of their interest rate is likely going to spur some domestic consumption in the coming months. I think soybeans picked up with the copper, that trader sentiment as well. Corn and wheat both had been marginalized most of Monday's trade by traders, even though cash corn at the Gulf jumped 10 cents, and even though recent rainfall missed about 1/3 of the corn belt, including Iowa, most parts of Iowa. Wheat harvest pressure continued in Europe, however, with French milling wheat in Paris falling 1%. So the traders looked at wheat and corn pretty similarly, and that's why I think they did the inter-commodity spreading. Weekly crop conditions by USDA will be coming out Monday afternoon. Traders are expecting 1 to 2 point declines in good to excellent conditions. If those declines are greater than that, I think there might be some fireworks on Monday night's trade. Midday weather models also showed a drier forecast in the next 7 to 10 days for most of the western Corn Belt, excluding eastern Kansas, with noted dry weather in most of Iowa and the northern half of Illinois. That's it for now. For more information, go to globalanalytics.biz. Please remember there is substantial risk of loss in trading futures and options, and the impact of cycles or current events on prices may be already reflected in futures. Have a great day, everybody.